Hello and welcome to the November edition of Bridge to India's policy and regulatory update on India's renewable power sector. We will look at the various updates from central as well as state government agencies. Ministry of Finance has relaxed requirements of performance bank guarantee and earnest money deposit. The Ministry of Finance has asked central public sector companies to reduce amount of performance bank guarantees for new tenders and contracts issued or concluded by 31st December 2021 to 3% of the contract value. The companies have also been ordered to not demand any EMD in tenders issued until 31st December 2021. Bidders will instead submit a bid security declaration form as part of the bid response. The government has implemented these measures in response to financial crunch faced by developers and difficulties in obtaining bank limits. The government has already taken several measures to reduce costs related to EMD and PBG. Earlier this year, MNRE allowed bidders to submit pay-on-order instruments issued by REC, PFC or IREDA instead of bank guarantees. Ministry of Finance also ordered CPSUs to return PBG to developers in proportion to capacity commissioned. With reduced bidding cost, developers will be incentivized to bid even more aggressively, which can adversely impact the market in the form of price distortion. MNRE has amended guidelines for procurement of round-the-clock renewable power blended with other sources of power. MNRE has allowed bidders to blend power from any other renewable power source instead of only coal-fired power. Other relaxation pertains to location of power plants, which can now be situated in same or different regional load dispatch center areas. Bidders are required to submit 4-part tariff including tariff for renewable power, fixed charge and variable charge for fuel and transportation costs respectively for non-renewable power. Winning bidders are required to match L1 bid. Penalty for not meeting requirements of minimum renewable energy share of 51% and minimum CUF of 85% has been increased steeply from 25% to 400% of applicable tariff. Allowing non-renewable sources other than coal-fired power is unlikely to attract new bidders as only thermal power IPPs would have spare capacity for participating in the scheme. We believe the participation will likely be restricted to few developers including NTPC, Adani, JSW and Semcorp. Limited number of potential bidders, requirements to match L1 bid and sharp increase in penalty for failure to meet supply conditions should see less competitive bids. MNRE has enhanced targets and revised guidelines for PM Kusum scheme. MNRE has surprisingly enhanced capacity targets under Kusum scheme from 25.7 GW to 30.8 GW by financial year 2023. Developers have been given 12 months instead of 9 months from date of LOA issuance to commission grid-connected solar power systems under Component A. They will not be penalized for any shortfall in generation below minimum prescribed CUF of 15%. Target for off-grid solar pumps has been increased from 1.75 million to 2 million with 9.6 GW capacity. Target for grid-connected solar-powered pumps has been increased from 1 million to 1.5 million, equivalent to 11.2 GW. Heeding to demands of the industry, MNRE has allowed manufacturers of solar modules and solar pumps to bid individually or in joint venture with system integrators. Again, the bidders are required to match L1 bid for allocation. Enhancement of targets contradicts slow progress on the ground. Initial guidelines were issued in mid-2019, but very few states have so far made any earnest implementation efforts. High execution risk and low approved tariffs are unlikely to attract mainstream developers. Rajasthan has revised open access charges for renewable power projects. Rajasthan Electricity Regulatory Commission has issued an update for applicability of open access charges on renewable power projects. In a major concession to the industry, wheeling charges would now be levied on the basis of electricity wheeled instead of contracted capacity. Wheeling and transmission charges are applicable in full, except that there will be 75% exemption for storage-based projects for 7 years. Banking is allowed only for captive projects and limited to 25% of power injected in each time block of 15 minutes. Developers can carry forward surplus power until the end of financial year, but any unused power will not be compensated by DISCOMs. Capacity of captive projects is restricted to contracted demand, and annual consumption is allowed up to CUF of 25%. Grid-connected consumers with captive projects will be charged parallel operation charge, which will be determined separately. Overall, capacity size, banking and consumption limitations make Rajasthan an unattractive market for captive projects. Tamil Nadu has approved tariff of 2.28 per kilowatt-hour for sale of surplus power to DISCOMs generated from solarized grid-connected pumps under PM Kusum scheme. Farmers will also receive an additional incentive of up to 1 rupee per kilowatt-hour for sale of surplus power, with the minimum annual incentive set at 3,000 rupees and no limit on maximum incentive. Individual system size will be limited to twice the pump rated capacity. Himachal Pradesh Electricity Regulatory Commission has issued draft order for solar power projects. HPERC has issued draft tariff order for solar power projects of up to 5 megawatt capacity. The tariffs will be applicable to projects whose PPAs have been submitted for approval in financial year 2021 and those commissioned before 31st March 2022. The Commission has proposed tariffs of 3.41 to 3.48 per kilowatt-hour for projects up to 1 megawatt capacity and 3.37 to 3.44 rupees per kilowatt-hour for projects between 1 and 5 megawatt capacity. Tariffs vary depending on location of projects. Tariff for projects larger than 5 megawatt capacity will be determined through competitive auctions. That concludes summary of key policies and regulatory orders passed in November 2020. We hope you found this update useful. You can view all policy and regulatory information and much more information on the renewable power sector in real time at India RE Navigator. Please share your comments and feedback at contact@bridgetoindia.com. We will be back early next month with a fresh update. Thanks.